Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, and share buttons. Well, a global banking crisis is straight ahead. Today we're going to talk about what's going on right now, what's going to happen in the very near future, and how it all relates to Bible prophecy. So, why is there a global banking crisis coming? We're going to tackle all of that. Let's start with this statement from the U.S. Federal Reserve last week. They had a meeting, and afterwards they released the statement, and people pay attention to the changes in the statement from meeting to meeting. So let's look at that statement right here, and you'll see the red lines denote what's changed, what was stricken from their notes from the last meeting. And notice this right here. The U.S. banking system is sound and resilient. So that has been put out in this Fed statement since March 2023, following the collapse of the second, third, and fourth largest banks in U.S. history. They've continued to make that statement. The U.S. banking system is sound and resilient. As of last week, they've deleted that statement. Now, some people might say, well, Britt, they've deleted that statement because there's no need to even say so anymore. Things are so great, right? Is that why they're doing that is a possibility. Maybe they think that. Maybe they think things are so great we no longer need to even make this statement anymore. But how about maybe they're deleting it so that when things fall apart, because they know that the U.S. banking system is not sound and resilient, they can say, well, why are you so surprised? We told you this was coming. And you'll say, when did you tell me it was coming? And they'll say, well, for a year we stated that the U.S. banking system was sound and resilient, and then we deleted that from the statement. So don't say you didn't know it was coming, right? That's what they're gonna say, because guys, it is not sound and resilient. We've talked in the past about how the FDIC had this meeting back in 2022 where they war-gamed out a scenario of the next financial crisis, and they said, they came out and said the U.S. banking system is not sound and resilient. I know that. You know that. Everybody in the room knows that. Ha 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 ha. But we have to make sure that the average Joe thinks it is. Because if they lose faith in the banking system, it's game up, right? So we know they're going to tell us whatever they have to tell us. They've been telling us for going on over a year now, or at least for the last 10 months in this statement, but for a long time. Oh, everything's fine. The U.S. banking system is sound and resilient. If you remember back in 2008, John McCain said the fundamentals of the economy are sound, right? And all these other officials for the United States government said the same thing, and then everything fell apart, right? So they're going to say these things, doesn't make it so. And of course, as they strike this statement, we see something else going on right at the same time. Many of you are aware of this. We have New York Community Bancorp, which is the 7th largest originator of mortgage loans in the United States. I believe they're the 28th largest bank by asset size. Came out and said, yeah, we're not doing so well. And so their stock dropped from $10 and change on January 30th to, $5 the next day, and then hit a low of $3.60. It's up some since then. So we're starting to see the strains in the banking system again. They released this press release not long after, earlier this week, 3 days ago, it looks like. But I want to note here, let's note this bullet point here. Total uninsured deposits are $22.9 billion. Now they'll say, hey, no problem, we've got $37.3 billion exceeding the uninsured deposits. But again, for how long? I would ask this question. Common sense tells you, right? You see, let's say you have your cash at the local bank, and all of a sudden it makes big headlines that, oh, they're really hurting, but everything's fine and sound. No need to worry about your deposits. Once they start saying that, what's human nature to go, maybe I should worry about my deposits, right? And so if you're a business in all likelihood, or even individuals, some individuals have large amounts of cash that exceed the FDIC insurance limits. But the people holding on to that $22.9 billion at this bank, I can tell you, they're absolutely nuts if they leave it there. They're absolutely nuts. You have to believe that they're pulling a large portion of this out and moving it somewhere else, rather than saying, well, hey, if the bank collapses, and I lose $1 billion, no big deal, right? Nobody's saying that. So common sense says there's huge deposit flight from this bank, and it's just a matter of time before we see it collapse. Yes, all of these things that they state in here may be true. I'm not disputing any of that. But what they don't know is the reaction of other parties relative to their bank. So the banking system is dependent in large part on banks lending to each other, other financial institutions providing liquidity through loans and credit to each other. If other financial institutions start saying, I'm not so sure that I want to lend anything to New York Community Bancorp because they may not pay me back, well, then the credit line for this bank gets cut off, and that changes significantly all of the things they may say in this press release that say, hey, everything's fine. The U.S. banking system is sound and resilient. Nothing to worry about here, right? There's nothing to see here. As this is just really the beginnings of the next wave. We're back when we saw the collapse of those banks back in the spring of 2023, and then everything seemed to recede from the headlines. The mainstream media wasn't talking about bank runs or a banking crisis anymore. I said at that time, this is just a temporary kicking of the can down the road. Nothing has been solved. The underlying problems have not been solved. We've talked about $800 billion in unrealized losses at U.S. banks. And that number's getting bigger as we see commercial real estate have to roll over. People are not going to offices the way they did 5 years ago. And so a lot of those commercial real estate properties have been marked down. They are generally financed. I think 87% of those types of properties are financed on interest-only loans on a 5-year term. So as those need to be refinanced, they're being refinanced at much higher interest rates than they were originally. And the tenants aren't there paying the rent the way they were in the past. So that's one of the things that's hitting New York Community Bancorp right now is their commercial real estate portfolio. So the underlying issues that caused the banking crisis back in 2023, they were never resolved. And we said, this is going to rear its head yet again in the near future. I think we're starting to see that now. And we're going to talk about why we're certainly going to see more stress in the weeks ahead, not the months ahead, the weeks, just a few weeks away. So let's look at this article right here. This is from Zero Hedge. It says, more dominoes. U.S. commercial real estate downturn sends German lenders into turmoil. So this says a severe downturn in the U.S. commercial real estate property sector has already sent some banks in New York and Japan into full-blown crash mode because of their high commercial real estate exposure. This turmoil is now beginning to affect European banks as well. Bloomberg reports that real estate-focused German lenders were hammered this week after Morgan Stanley analysts told clients to sell senior bonds linked to Deutsche Pfandbrief Bank, not sure if I'm pronouncing that right, due to the lender's high exposure to the U.S. commercial real estate market. So we're seeing banks in Japan, banks in Europe, banks in the United States, all under stress as a result of what's going on. Again, this is not a U.S. problem. This is a global banking crisis. This is a problem with the global financial system, and this is a sign of the stress that's occurring. So we're going to see more banks just like New York Community Bancorp. If we go down toward the end of this, we'll see this chart here where it talks about here are the regional banks with the largest commercial real estate loans relative to capital. So let's make that a little bit bigger, and we'll see this red line here represents New York Community Bancorp, and there's another 25 regional banks with a worse position of that commercial real estate exposure relative to their equity and their capital. So guys, this is 25. I'm not saying all 25 of these banks are going to fail, but there's 25 candidates that are definitely prospects for going into stress in the same way that we're seeing with New York Community Bancorp. And then again, this creates a scenario where everyone becomes afraid to lend to everybody else. And that's when you see the credit markets become distressed. And unless the government steps in and just starts printing dollars and handing them out, you see the credit markets freeze. And that would cause a severe financial crisis almost immediately. Let's look at this Zero Hedge article as well. It says U.S. banks see massive deposit flight, the biggest since Silicon Valley Bank. So here we have a bunch of charts in this article. We'll look at a couple of these. We had the bank, it mentions the bank term funding program. We're going to get to that in a moment. We've talked about that in the past. But let's look at this chart right here. This is the reverse repo facility. This is another central banking program that's built to bail out the banks, because remember, the banks own the Federal Reserve. It is not a government entity. It was created by the banks for the banks to serve the banks. Without getting into the nuts and the bolts of what this program is, which would probably bore a lot of people, when we see this decline, it's preventing stress in the banks that would otherwise happen. This is a lifeline to the banks that's creating liquidity for the banks so that there's less stress in the banking system. This has been counteracting the quantitative tightening that the Federal Reserve has been undertaking for the last, since they started raising rates, right? This is set to hit zero in March, which means that this will no longer be alleviating stress in the banking sector, which will add to the stress in the banking sector at the same time that the bank term funding program is set to expire, which is on March 11th. But here they have this chart, which says total deposits plunged by a stunning $168 billion last week, the biggest weekly drop since the Silicon Valley Bank crisis. So again, guys, nothing has changed since that Silicon Valley Bank crisis to fundamentally alter the problems that were hurting the banks at the time. Let's take a look at this. This is the United States 10-year Treasury. So this is 10-year Treasury debt, gets loaned out for 10 years. Right now, they're paying 4.18% on that. This is an example of the type of asset that many banks hold, and really a benchmark asset for what the banks would hold. And here we have an example of where this stands right now, and this is where it was when Silicon Valley Bank went into distress, and when we saw all these underwater, unrealized losses at the bank balance sheets just balloon up. Back then, it hit a high close of 4.09%. We're above that today. Of course, we've seen it higher recently back in October, which again is when we started seeing glitches in the banking system globally. We saw, oh, there was malware here. That's why we had an issue there. Oh, another software glitch, right? And then we saw increased usage of the bank term funding program. Again, let's take a look at that. This was a program created to bail out the banking crisis in the spring of 2023. This expires on March 11th. And let's get an update of where this stands. This hit a peak of $167.7 billion on January 24th. In the 2 weeks since then, it's declined less than 2%. Now, at the time, right here, this pinnacle marks a point where the Federal Reserve closed this basically loophole that allowed some banks, in theory, to take advantage of a spread between what they would pay in interest on loans under this program and what the Fed would pay them to hold cash reserves at the Federal Reserve. So many people said, oh, all of this rise that we saw here was a result of that loophole. And now they've closed it. Well, they closed it, but it's barely gone down 2% since then. That indicates that we were right when we were talking about this going up the whole time, that it was banking stress that was causing the increase in use of this program. And so keep in mind, these are 1-year loans that go out. That means that $79 billion of these loans must be paid back by April 5th with interest. So these banks that were under stress in March of 2023 are going to have to pay back $79 billion plus interest. And the reason, and what they did under this program was they took assets like this that here were underwater. So let's say that you had a debt with a face value of $100, but it was now worth $70. Well, you were able to lend it to the Federal Reserve under this bank term funding program for $100 in value, even though it was worth $70. And in exchange, you paid a low rate for that, but it's due back in 1 year. And the hope is, oh, well, after that year, the banking crisis is over, everything's fine, you can easily pay this back. Well, they're going to have to pay back $79 billion of these loans by April 5th, which is less than 2 months away. And in order to do that, they would have to, they would get back, assuming they're even capable of paying those loans back, they get back assets that aren't worth $100, but are worth $70. And in fact, are actually worth even less now because interest rates on this debt are higher than they were then. So these assets are even more underwater than they were when the original banking crisis took place. So guys, this is not going to get better. This is actually going to get worse. This is going to come to a head in the next 4 to 6 weeks as we see the bank term funding program come to an end on March 11th. We're going to have to see initially, let's see, by March 15th, 12 billion's due back. By March 22nd, 53 billion's due back. By March 29th, 64 billion's due back. At the same time that we'll see the reverse repo program hit zero, we're going to see massive stress in the banking system. And we may very well see bank runs on some of these banks as people start to rethink, should I have uninsured deposits? Should I have my business payroll at this regional bank? If they might go under, then what does that mean for my business? Wouldn't be able to pay my employees. So we're going to start to see massive deposit flight. We just talked about that $168 billion last week, the most since Silicon Valley Bank. But we're likely going to see those numbers increase, and we're going to see the stories we saw in the mainstream media last year about banking crisis, bank runs. We're going to see those stories come back again this March, just as we saw last March. That's my thought. Now, many of you might say, well, what's to stop them from doing the same thing they did last year and kicking the can down the road? Nothing, and I fully expect them to do that. The question is, what will the market reaction be to that? Will it have the same impact, or will the market wake up and say, wait, you still have an issue here? You're just going to create dollars? What if it doesn't have the same impact? What if the Fed lowers rates? And they can lower the rates on, short-term debt for the U.S., but the market determines what 30-year and 10-year debt is. What if that doesn't go down? What if that goes up as a result of this? What if there's panic and those interest rates go up? Then you have even more distress on the banking system, and we have a major, significant problem, which when you take in context of what's happening in China right now, we'll have to talk about that in a future video, but China is in the midst of a deflationary spiral. Again, that's what we saw in the Great Depression. And China, depending on how you look at it, is the second, third largest economy in the world. So that can't happen in a vacuum where only China gets hit hard, but the rest of the world, everybody's fine, everything's great. It's not looking that way, guys. I think we're heading into these next few weeks are going to be very interesting. We'll see how this all unfolds, but this may be the beginning of the financial crisis and the moment everyone wakes up to the global depression that I believe is already here. And again, we'll know that if we look at this metric right here, the 2-year, 10-year spread. When we see this go positive and stay there, we'll know that the crisis has arrived. We will see everyone, we'll see it will become common knowledge that we're in the midst of a global depression and a huge economic crisis. We want to see this go we don't necessarily want to see it go positive, but it will at some point. But when that happens, you'll know that the crisis is here, that we're not talking about this theoretically anymore. I can guess on timing all I want, but that's what it is. It's just educated guesses based on observing this data. But this data has a 100% track record over the last 70 years of when this number goes positive, because they call it an inverted yield curve. You can look that up if you want to learn more about that. But it's not the inverted yield curve that predicts the economic downturn, but the inverted yield curve that goes back to normal, right? So when it goes back to normal and this becomes positive again, then, things are in trouble. Things are falling apart once that happens. So along that note, what does this have to do with Bible prophecy? What's going to happen specifically? If all of this happens as I say it's going to happen, what will happen? And I want to take a look real quickly at this article because I think it shines some light. It might give people some insight into what's going on. So this is from Fortune. It says Jamie Dimon, so he's the CEO of JP Morgan Chase, largest bank in the world. Jamie Dimon says Washington faces a global market rebellion over record U.S. debt. It's a cliff, and we're going 60 miles per hour toward it. And he says, this is 7-10 years in the future. He may very well be wrong, but he's not giving a happy prediction of what's coming. But that's not necessarily what I want to focus on, because I want to focus on what's toward the bottom, because the best stuff's always buried at the bottom. And I want to read this paragraph right here. The businessman who was lauded for his purchase of First Republic Bank last year following the regional banking crisis. So this is saying, oh, he was celebrated for coming to the rescue, right? He came to the rescue. JP Morgan came to the rescue and propped up this failing First Republic Bank because, wow, if they had failed, the whole system would have fallen apart. Guys, Jamie Dimon and JP Morgan is not to be celebrated as the rescuer here. They are at the heart of the problem and the issue. Again, I mentioned before the Federal Reserve and central banks, but the Federal Reserve, United States Federal Reserve in particular, is not an entity of the federal government. They are a private entity owned by the largest banks. It's so secretive, we don't really even know for sure who the largest shareholders are. But I would assure you that the largest shareholder is probably JP Morgan Chase, because they were instrumental in the creation, the initiation of the Federal Reserve back in 1913. So the Federal Reserve is making its moves at the behest of Jamie Dimon, which is the other reason I want to look at this article here where they mention, oh, Dimon took the chance to shut down rumors he may swap the boardroom for the Oval Office. Again, even if he had let's say he had the means to run for and win the presidency, he would not do it. They are just rumors, because he has more power as the CEO of JP Morgan Chase than he does as president of the United States. Let that sink in for a moment. The control of the central banks comes through him and the other big banks, Citigroup, Bank of America, Wells Fargo, the global systemically important banks around the world. They're controlling the world's central banks and making these decisions. So you might say, well, so they shouldn't be celebrated for coming to the rescue? No, because A, they created the problem to begin with, but B, they're swooping in and buying distressed assets. So we've talked before about the Great Taking. In this book, The Great Taking, not sure if we'll see exactly everything that was written in that book play out. But what I'm certain we will see is a replay of a deflationary event similar to the Great Depression, the Great Financial Crisis, where many people who own real estate have to sell it for pennies on the dollar, or we see bank failures. Well, who benefits from these small regional banks failing? Well, JP Morgan, because JP Morgan and the other big banks can swoop in, they can buy the good assets that are left for pennies on the dollar. They can hand off the losses to taxpayers, and they can gain all the deposits and whatever other assets they want from these failed banks. All of their customers come over there. JP Morgan is not the good guy in this equation, so to speak, coming in to save the day. Now, why do I bring that up? I bring that up because we are going to see, I want people to understand that while we've seen inflation recently, and we are going to see inflation in the future, it is not inflation that we're looking at in the near term. It's deflation, as we saw in the Great Depression. Because, as long as you are able to weather the storm, inflation would be to your benefit, right? If you have a lot of debt, and it gets inflated away and you can pay this mountain of debt. Let's say you could pay off your mortgage with half a day's pay because of hyperinflation. Well, you might go, that's a good thing, even though hyperinflation's a bad thing. Hey, I can do this. I'll benefit from that. The bank would lose. Guys, the banks are not going to lose. The banks are the ones controlling the situation. It's not set up for them to lose. What you'll see before you see the big inflation or the hyperinflation is going to be the large financial institutions, all of these politically connected people coming in and picking up distressed assets like failed banks, foreclosed homes, stocks that are sold for pennies on the dollar, bonds that are sold for pennies on the dollar because the people who own them now come under a distressed situation and they're forced to sell. And then these other entities, they'll come in, buy all those things for pennies on the dollar, and then the inflation and or hyperinflation takes off, and the value in at least nominal terms of those things goes sky high. Not when you and I have them. The system isn't made for us to benefit from this. The system is made to take from the middle class and the poor, those who aren't politically connected and able to do this. And what they'll do when they create this situation, they'll act like, hey, it just came out of nowhere. Who would have thought? But we have the solution. Central bank digital currency, right? And we've talked before about what they're going to say. They're going to say, well, you'll see all sorts of mainstream media stories with the Bailey Brothers Savings and Loan, building and loan, and how there's a run on the bank. And, runs on the banks don't happen like they did back in the 1930s where everybody's lined up outside. They can just get on their phone and they can push a few buttons and transfer that cash somewhere else. So we still have banking regulations that are like they were in the 1930s. We need to update those. We need 21st century banking regulations for the 21st century bank runs and the 21st century bank problems we're facing. So we need the central bank digital currency so we can monitor in real time the health of these banking institutions, the health of other non-financial institutions, unregulated financial institutions, hedge funds, all these places. Maybe there's Ponzi schemes. There's another Bernie Madoff out there defrauding people. We would know that if we had central bank digital currency that would enable us to know that Ponzi scheme is being run. And when people have lost their jobs or lost their homes, lost everything, they'll be desperate and they'll go along with that. Again, we could see a scenario where savings is wiped out, 401ks are wiped out, and they say, well, we can restore all of this under the new system. So if you take the central bank digital currency, you can have the cash back in your bank account. You can have the stocks back in your 401k. But if you aren't willing to do that, well, you're out of luck, right? And they push us into this cage. Again, when they do this, however it is they do this, and they will do this, this is the plan in place, is central bank digital currency, everything digitized and tokenized on the planet so that they can control it all. That won't be the mark of the beast system, but guys, it sets the stage for the mark of the beast to be rolled out during the tribulation, because such a system will be indistinguishable in function from the mark of the beast system. So that's why all of this is extremely relevant to Bible prophecy, guys. It means Jesus is coming back. We're in the general season of his return. We can see the signs that Jesus and the prophets said to look for. And Jesus said, when you begin to see these things, look up, your salvation draws near. So we're seeing in our day and time the setup, the stage being set for the Revelation 13, verses 16 through 17, mark of the beast, this ability to control who can buy or sell anywhere in the economy. Guys, that tells us how near we are to that time. So again, prepare yourself the best you can. The best way that you can prepare is to make sure that you know the Lord Jesus Christ, that you have a saving grace relationship with him, that you know that he died on the cross, he shed his blood, and he was resurrected from the dead so that we could have forgiveness of our sins and be reconciled with God. If you know that, you're prepared. That's the most important thing you can do to be prepared. But I'd also make sure, leading up to all this, have a deep pantry. Be prepared for any scenario where your credit cards don't work, your bank cards don't work for a period of time. A couple of weeks probably. But that time is most likely coming this year. Again, I could be wrong on the timing, but I don't think I'm wrong on the timing that we're going to see some big fireworks here in March as we see these programs come to an end and we see the stress in the banking system skyrocket. So let me know what you think. Leave your comments below. Make sure to hit the like, share, and subscribe buttons. And God willing, I will see you on Monday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to sign up for my free monthly newsletter and get your copy of my free ebook, 7 Signs of the End Times. Just follow the link in the description to get your free book. Also, make sure to check out all of my books. Just look up Britt on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.